So First Capital Group, it's well known to financial advisors. I didn't realize until reading your story just how well known it was to financial advisors. It's absolutely massive in terms of its mutual fund business, its assets under management. It's got this close to 100-year history, but it's really flown under the radar to the general public for much of the century. What is it and where do they play?
So it's a firm that's basically coming up on its centennial, and it's been in LA since 1931. And its business for basically the vast majority of that time was marketing investment funds to financial advisors. And so they have, extremely strong and close links to the likes of Edward Jones and LPL Financial, who then have, of course, retail clients, thousands, tens of thousands. In fact, they basically say they have 20 million households or families who basically in one way or another have a relationship with Capital Group. Interestingly, for the vast majority of that time, the funds were called American funds. It actually had a different brand name, and it wasn't really even known as Capital Group. And that's, if people have them in their retirement accounts or their brokerage accounts, they probably know it as American funds. More recently, though, they've started to expand considerably beyond mutual funds. And that mutual funds really was and continues to be the heart and core of the business. So what's growing now or in the recent past is they're making a big push into ETFs. I think it's worth bearing in mind that this is an active-only firm, always has been, still remains that way. So this is not the index fund sort of giants like Vanguard, State Street, BlackRock. This is a very different firm, and that is their core, their DNA. And so when they move into ETFs, it's active ETFs. And they now have, over the last, they debuted these active ETFs about in 2022, early 2022. And that business for them has grown to about $100 billion,
wow,
which is actually a pretty, significant clip in 4 years. The really recent change for them is expanding into what is a really competitive part of the market now, which is private assets. And
surprise, like everybody else,
exactly,
right? Well, talk to us about that, because it does seem like they've been a culture that has been quiet, under the radar, doing their thing. It's worked really well. Why are they making this pivot? I mean, I say that with the caveat that I feel like Tim and I, everybody we talk to, it's all about private markets, private credit in particular. So right, I get why they're looking at it too. But why affirm that they've had a strategy that worked well, but maybe it's not working as well as it did?
So they, like many firms, have had a lot of redemptions from mutual funds, especially equity mutual funds. And, that's true across the industry, and they've felt it too. One of the reasons on the private piece of it is, they've seen the demand from wealth advisors, financial advisors, not necessarily the ultra high net worth client, but the maybe wealthy, but maybe slightly less wealthy client. Right. And they've seen, demand from financial advisors, some clients, the beginnings of this. And, much like some other firms, they basically don't want to, miss the opportunity and be there kind of in a position to essentially provide those kinds of funds. And they see a considerable demand, like a considerable increase in the coming years, much like other firms. But this is like a very competitive part of the market, as we all know.
Yeah, I mean, so I'm glad. I was so glad to see this story, as I was telling Carol, and I was telling you too. Like before we came back, we were at Schwab Impact in Denver at the beginning, about a month ago, almost a month ago. It's a huge event for RIAs. Anybody listening or watching knows, because we were there for 2 days, and there was a lot of marketing happening. And one thing I was surprised to see was a Capital Group. A lot of a fleet of cars that were branded Capital Group and KKR. And I thought to myself, this is not really what I imagine and what I know Capital Group as being.
Right.
So if you think about what these funds look like,
yep,
if a big portion of them is private, how does an investor know what that fund is worth at the end of each day? What that investment in that fund is worth each day? In other words, how do they market to market?
So basically, the funds that have launched, there are two that are currently live in the market that are called interval funds. It's a structure that basically caps the amount of money you could actually redeem on a moment's notice. It does have pricing, and it does have typically higher fees than what you'd get in a normal stock or bond fund. They've tried to pitch these funds. I think what is perhaps a little bit different that they're doing than some other companies is the two that have launched are a combination of public assets and private. 60% public, 40% private. the two are credit in the debt markets so far. And so, they are trying to basically have a considerable amount of liquidity for a perhaps wealthy but maybe not ultra high net worth clientele, so that there's maybe an easier access point. That's how they're trying to position these funds. That's perhaps different than some of the purely private asset funds that have been available over the last couple of years. On the marketing point, I think we've seen this from almost every firm when they are getting into this this part of the market. There is a lot of marketing and a lot of sponsorship. Everything from F1 cars, golf, tennis. The Capital KKR bit is not that, but for them, it is an evolution in terms of how they approach their clientele.
Yeah, you made the point in the piece that I thought was just fascinating. For years, they didn't have a sign on their headquarters. Right. Like, that's how under the radar they were.
Yeah, and they're really trying, in the last couple of years, and increasingly, there's much more marketing. The CEO, Mike Gitlin, he's doing what some others are doing, right? He's on social media a lot. There's sort of selfies about training for half marathons next to the beach. There's podcasts with investors. There's podcasts with an NFL Pro Bowl wide receiver. Like, this is for them, this is quite different. Perhaps it feels like a little bit similar to what some other firms are doing, but it's an important change for them.